Everyone, welcome back to another episode of Capitalize on Retirement. Today, we're answering a question that we get asked all the time. I'd probably say one in every three workshops this gets brought up, and a lot of
Probably almost everyone. Yeah.
everyone, right?
Yeah.
Like this is very common, and that question is: will Roth IRAs ever be taxed? We're kind of going to go through that question and
Yeah.
answer it the way we think, and it's very common, and some of the concerns are. I understand why people ask the question, right? It's
Yeah.
it's it's rational because of our government debt and
Right.
how quickly we've been changing tax laws.
Yeah. And the thing is, people are afraid that if they pay the taxes today to get money to a Roth, well, then tax laws are going to change down the road and now I'm going to get taxed again, right? Because that's a tax-free vehicle and it's very powerful. And I get why people are concerned about
Yeah,
it.
it's a common question. If I was going to do a Roth conversion today, pay taxes to get my money into a tax-free account, and then the government comes down the road 15 years later and says
Yeah.
Roth is now taxable, that's a huge deal breaker.
Yeah.
So we want to let's talk about this kind of myth or this common question. And I think first let's hit it with what a Roth IRA is.
Yeah, Roth IRA, just for our viewers who don't know, contributions are basically after tax dollars.
Yep.
The growth is tax deferred,
Yep.
right? You defer the tax bill, and then it's tax free if as long as you use it the right way when it comes out. So qualified withdrawals are
Yep.
tax free.
And I think the main thing is, Roth is probably one of the most powerful vehicles in the tax code, but Roth IRAs are actually written directly into the tax code. They are governed under Internal Revenue Code section 408A. So they're not just an idea, they're written into the code. So for them
Right.
to change that, they have to rewrite the code.
Yeah, and you've already paid the tax. So
Yep.
that's the deal that you've made with the government is I will pay the taxes today and get my money to a tax-free account.
Yeah. And you
So,
could do that a couple different ways to get money into a Roth. One, you can do it through 401k deduction. So your 401k
yeah.
contributions can go in after tax, grow tax free. There's no limits to that or as far as income limits. You could also do that via Roth IRA contributions. There are income limits to that. And then you could do that via Roth conversions.
Yeah, so let's talk about why people are worried about Roth IRAs, right? Government debt is high, tax rolls change a lot, it seems like.
Yep.
And retirement accounts are very large
Yep.
because they've grown, people put money in them, and they've grown over time.
Yeah, that's most of the people that sit down with us for the first time. That is their largest asset.
Yeah. And people are worried that the government could just say, hey, sorry, but we're going to change the rules again. And now that's going to affect your Roth IRA that you've already paid taxes on.
Yeah, but here's my thought behind that, right? Most of the families that we serve, or most of the families that are listening to this, their largest account is in their IRA or 401k, not the
Yeah.
Roth. So if we think about the real risk, I mean, I'll ask you this question. I know what the answer is, but do you think it's more likely that the government will change the tax code and tax Roth, or taxes will be higher at some point in time?
Yeah, I mean, that's a tough one. But what I would tell you is my opinion. I think taxes will be higher in the future. And a lot of our clients, even though some of them are in really high income earning years, we're still telling them to put money into a Roth IRA
Yep.
because we feel taxes are going to be much higher in the future. If you look at our government debt, if you look where the government's spending money, a lot of these things point to higher taxes in the future.
And if you look at tax codes throughout history,
Yeah.
I mean, right? We're in a low tax bracket environment right
Yeah.
now, which is opportunity for people to get money to Roth.
Yeah. I think when the tax code first started, there were 27 pages in the tax code when it started in 1913.
Yeah.
Now there are over like 6,000 pages in the tax code. So it's very complex and it's constantly changing.
So let's kind of get to that. Can the government actually tax Roth IRAs? And Congress can change tax laws. I mean, nothing is 100% guaranteed, but it's very unlikely that they will tax Roth IRAs retroactively,
Yeah.
meaning if you already have money in a Roth IRA, it's very unlikely that that money that's already there will be taxed.
Yeah. And I think the reason that it's going to be hard to change that is because we've already paid the tax and we've told the government we're happy to pay you now.
Yep.
So what that would do is number one, it would break trust. I think this is the biggest one
Yeah.
with the US taxpayer or US citizens. It's like, hey, you told me that I could pay you now, get my money tax free. Now we're going to break trust with millions of people. That could be a big issue down the road. So I don't necessarily think they're going to change the tax code and impact Roth IRAs, but they may make some changes to them.
Yeah, I mean, even if they did that outside of breaking trust, that's going to impact millions of
Millions of people.
savers.
Yeah.
And that's politically challenging,
Yeah.
right? Like politicians want to get reelected. If somebody were to propose this change,
I probably wouldn't vote for him.
no, I mean that's kind of my thing too, and that's a big deal to these
Yeah.
politicians. I mean, we could all agree or disagree on those views, but at the end of the
Yeah.
day, politicians do want to get reelected.
Yeah.
And that's like Social Security, right? We don't want to touch that one with the 10-foot pole
Right.
because, you're
Yeah.
you're knocking your chances of reelection down quite a bit.
Yeah, so I think it could impact future contributions into a Roth IRA. I
Yep.
think there could be some differences there.
Yep.
But I don't think it'll impact existing Roth balances. That's just my opinion.
That's mine as well. I think if we look at what history has told us, right? I don't think that they would ever make Roth IRAs taxable. But what I think they could do, because one of the advantages of moving money to a Roth IRA is you don't have any RMDs anymore. But
Right.
what I could see happening, a couple different things that I could see happening is one, maybe they put an RMD on your Roth.
Let's talk about what an RMD is real quick, just so
Yeah,
you just
no,
clear
great.
that up.
Hit that.
So an RMD is a required minimum distribution. You're forced to take money out of your retirement account at a certain age.
Yep.
Some of our clients age 73, others age 75. They tell you that because you've never taken the money out yet. They want you to take it out and start paying taxes. A Roth, the reason there's no required distribution is because you've already paid the tax.
Yep.
But like you said, that might be something where, hey, we want to move that money out of tax free to a taxable account.
Yeah, that's what I could see happening. Maybe at some point in time, the government puts an RMD on a Roth, and just because you have to take it doesn't mean it's going to be taxed,
Right.
because it is tax free. But now, where are we going to put it? Well, we're going to go put it in
Right.
a brokerage account and pay taxes on it. So,
Right.
I mean, I think I could see that happening. The other thing that I could see happening there is the inheritance rolls. So right now, if you inherit any qualified retirement account, an IRA or a Roth, they have to take the money out over 10 years.
Yeah.
It used to be under what was called the stretch IRA rule, where you had to take it out over life expectancy.
Yeah.
People did that a lot with their IRAs, keeping that money pre-tax forever.
Right.
When 2020, that law changed to a 10-year distribution schedule. I could see potentially, and none of this is in kind of
Yeah.
talks right now. These are our perspectives, but I could see Roth having to come out maybe day one instead of
Yeah.
allowing that 10 years of tax-free growth
Right.
for beneficiaries. Maybe you have to take it all out day one,
Right.
still not taxed, but then where are you going to move it to? That moves to a taxable account, which generates taxation for.
Yeah. And I mean, if you think about that, if you do make that change, well, for the government, that's a lot of people inheriting Roth money.
Mhm.
And instead of letting it grow for another 10 years, well, now you have to take it out right away and you have to move it to a brokerage account and then get taxed every year if you have any growth.
Yep.
So that would cause a lot more tax, but it wouldn't impact a lot of the benefits to the Roth.
No, I mean, the Roth is still extremely valuable. I don't see any of that necessarily coming, but
Yeah.
if I saw changes to Roth IRA rolls, those would be the two that I could see potentially happening. I just don't see it being taxed.
Right.
I don't see them changing the tax code. Plus, a lot of politicians have money in Roth IRAs. So
Right.
I-
Exactly.
I don't see that one happening.
Yeah.
Um,
So let's talk about, some of the realistic risks that are there. I mean, contribution limits being one of them. So, I think this all the time. There's only so much that they allow us to put into a Roth IRA, and there's a reason for that. And so maybe they say, hey, you can put more money into pre-tax one day, but less money into Roth. I don't know what that would look like, but I could see that being the case. Maybe they just don't allow you to put as much money into these tax-free accounts.
I agree with that, and I also think what we could see is potentially like some of these loopholes in the tax code closing, like the backdoor Roth IRA essentially allows anybody of any income to do a do a Roth IRA, right? You just have to
Yeah.
go through different maneuvers, and there's some other limitations to that we're not
Yeah.
necessarily going into, but I could see that going away, or the mega backdoor Roth IRA.
Yeah. Definitely. I mean, so what's less likely, in my opinion, is taxing qualified Roth withdrawals and double taxing already taxed money. I just, like I said, I think it just breaks trust with the American people. And they've done it before, but that would be such a big change. I think it would cause way too much of an uproar for them to be able to change that.
Yeah, I mean, I couldn't agree more. I think what's easier for the government to do, right? Hey, we're in a lot of debt.
Yeah.
We need some income coming in. We're just changing the tax code or changing the tax
Right.
brackets
Right.
versus we are changing the entire tax code
Yeah.
and taxing Roth IRAs. I don't see it happening. Now there may be changes that happen down the road, like we talked about, but we don't know any of that.
Right. And that's the thing. We can plan for what we know. We can't plan for what we don't know.
Yeah, we don't know. So why Roth is still important? Obviously, tax diversification. We talk about this all the time, right? If all of your money is in an IRA, every single dollar is subject to kind of government risk, right? If the
Yeah.
government changes the tax code, or you need a different amount of income and it pushes
Right.
you through tax brackets, like it's all subject to that.
Yeah. I mean, and some of the other things here is RMD exposure. Like we talked about, you think they could change the RMDs. I think that's actually likely.
Hmm.
I mean, that's kind of a low-hanging fruit one, but there's no RMDs on a Roth IRA, but you do have RMDs on an IRA, and they could cause higher Medicare, cause higher capital gains tax,
Yep.
higher earned income or ordinary income tax. So there's a lot of different things that it could affect with IRAs, whereas Roth IRAs, it won't impact any of that because it's tax free.
Yeah, no, I couldn't agree more. And we kind of say this like, once you hit that RMD age, you're kind of on the government's plan because
Yeah,
they tell you how much you have to take out, and
right,
you have to take it out or you get a big penalty.
right.
So I think that's a big deal there. Understanding how the Roth doesn't have that impact on you. Most of the time, you're in the same, like if we're doing it strategically,
Yeah,
this is why you have to have a plan to do this. We're not telling anybody to go convert IRA to Roth, but we're
yeah,
telling you you should have a plan for it and be aware of how that impacts you because it can impact you
yeah.
greatly.
Yeah, and so we shouldn't make decisions out of fear, but I think tax diversification, you kind of mentioned this. We talk about diversification with our investments.
Hmm.
Well, what about diversification with our tax? So we think it's important to have money in pre tax and tax free
Hmm.
and taxable accounts because when you have money in all three of those buckets, you have plenty of options. And so you could kind of pick and choose your income in retirement based on what your tax situation looks like.
Yeah, and we could take money out of different accounts, and each of those accounts impacts you differently, right? And I
Yeah.
think having that ability helps provide a lot of it just helps provide a lot of leverage for you
Yeah, it
in
does.
retirement.
Yeah. Yeah, because if you know that I have all my money in tax deferred and I need a withdrawal, well, that could cause a lot of problems. So,
Yeah, it is what it is. Every dollar out of that account is taxed
yeah.
as ordinary income.
So, there's a lot of different changes that we could see coming. I think RMDs is one of them. I think when you inherit money from a Roth, that could change. But could tax laws change? Yes. But will Roth IRAs likely be taxed in a different way? I just don't think so. And maybe they change it for future contributions, but I think what we have now, I think it should be grandfathered in. And I think it will be. I just think it would impact too many people.
I agree with that. I think it's just, this is one of the most common questions we get. We felt like it was something we should come up here and address and kind of just give our opinion or our two
Yeah.
cents on it. Like, none of this is in Congress or being really
Nah.
talked about. It's just, I understand the fear that people have. If I'm going to pay these taxes today to get it to tax free, what if the
Yeah.
government, because there is a lot of distrust in our government.
Yeah.
And I think that's always been there, but
Yeah. And if you have distrust, you should really not trust future tax rates. Like, what do you think is more likely to happen? Like you said, higher taxes in the future, or will they change the entire tax code to tax my Roth IRA? I think the easy one is to just raise taxes.
oh, it's easy. That's stroke. Like, That
Yeah.
stroke of a pen, that's not an act of Congress. That's a little easier, right? To change the Internal Revenue Code, like that's an act of Congress. That's a
Yeah.
big deal. So,
Yeah.
um, all right, we'll kind of wrap it up. Our goal isn't to predict the future; it's to build a plan that works no matter what happens.
Yeah. Yeah. If you guys like the podcast, like, subscribe, send it to a friend or family member that might benefit from it. We love doing them.